Scott Bessent, the Treasury Secretary, likely to speak with his Chinese counterpart at some stage today, making some commentary we're seeing in reports that the Yuan is difficult to value. What does he mean by that? And could we be going down the path, if we do see the PBOC devaluing this currency, of the currency manipulator label?
Well, I mean, in the first Trump term, we already had seen that movie, and certainly by many perspectives, the yuan has been a bit of a symbol of unfair trade practices from the perspective of this administration. But the real question is, what can they really do about it? And I would say on both sides, I would argue there are limited measures the Chinese government has been taking to actively weaken the currency, and obviously in the context of some fear of sentiment getting worse, I think they would be fearful of certainly major exchange rate depreciation at this point. But the question also goes back to the US when it comes to engineering more dollar weakness. And I sort of call into question that that's really a big objective for this administration. But when it comes to bringing that actually about, we think a lot of it comes back to fiscal issues. And they're kind of doing the right thing. They're being a little bit more restrained on the domestic side, and they're encouraging more fiscal abroad, whether that's in China or whether that's defense purchases in Europe. So we are seeing them inching in that direction. But the label by itself, we think, is relatively meaningless in terms of financial market impact, but also in terms of bringing about actual policy measures to change the status quo.
Have you got any thoughts on just how low they could go over at the PBOC? I mean, no doubt the market seems to be doing the job for the central bank for now. So we've seen those firmer fixings to the UN midpoint each morning to try to send a signal to the market that they're really not in the business yet to let this currency go to offset the tariffs, because quite frankly, China doesn't even know what it's dealing with yet as far as the scale and the scope of those duties. But given that we saw about a 10 or 12% movement back in 2018 in the original trade war, I mean, how much room is there given that widening yield differential and, of course, some of the trade it does with the global south?
Yeah, so I do think the picture is quite different in 2018, mainly in two respects. And one of them is, I think the big issue for China this time around isn't so much trade. It's really still the property sector. And that also calls for a weaker currency. But on the other hand, the US dollar is already a lot more expensive and therefore has maybe correspondingly a little less room to appreciate. So if we put these two things together, I actually think we will, certainly vis-a-vis the dollar, see a lot less yuan depreciation. Now, could we get to 735 over time? I think that's clearly plausible. But I think when we think about yuan weakness this time around, it's probably not so much against the dollar. It's maybe more against the yen and maybe some of the other currencies that are less extended that we should be watching.